Well, as you can see, I'm still here in the garden in Melbourne. Spring is on the way. It's a much warmer day today. And of course, the case count in Melbourne is coming down pretty rapidly now, and everybody is very happy about that. But today I wanted to talk about our forecast for the Australian dollar. So when we last revised our Australian dollar forecast, it was back in very early June. At the time, the Aussie was at 68 cents. And we said it would go to 72 cents by the end of the year and 76 cents by the end of 2021. Well, it's already got to 72 cents, and this is only late August. And the question is, do I think the Aussie will stall from here? And the answer has to be no. So we've revised up our forecasts for the Aussie to be at 75 cents by the end of this year and 80 cents by the end of 2021. So the rise next year, 5 cents, relative to our previous forecast of 4 cents. So why don't I think the Aussie will be stalling between now and the end of the year? Well, our fair value estimate for the Aussie dollar is 78 cents. That's reflecting that interest rate differential that we now enjoy over the US, but it's also reflecting the very sharp rise in the iron ore price, near $120. And when we look at for the reasons why that iron ore price has risen so much, there's strong fundamental reasons. Steel prices in China are up strongly. Steel production in China is up strongly. As you know, the Chinese economy contracted by 10% in the March quarter this year. And the Chinese are in a rush to try and make up for that loss and still end up with a fairly decent number for the year. We're expecting that the Chinese economy will expand by 15% from that low point in March up to the end of the year. That's an extraordinary pace of growth. It's not because there's been a major supply disruption that's pushed up the prices. Brazil's production is now back to normal levels, and the Australian producers have lifted their levels as well. So we're fairly confident that our fair value will remain around that 78 cents to the end of the year. There are other factors that are supporting the Australian dollar. The Reserve Bank, for instance, has indicated that they're not interested in currency intervention. They would only intervene if they thought that the currency was a long way above where they saw fundamental levels. And of course, whilst their fair value model may differ from ours, they're certainly not thinking that the Aussie is in any way overvalued. So they'll remain on the sideline. Fiscal policy is going to remain supportive. We expect to see a very stimulatory budget when the government announces its budget policies on the 6th of October. I also look at global risk. Now, global risk is always a key factor for the Australian dollar. And of course, when we think risk, we have to think virus. Now, although the cases around the world are rising at the moment, I think markets are focusing more on developments around vaccines. So the New York Times reports that 41 companies are now in the testing stages of their vaccines. 20 of them in stage 1 where they're testing the tens, 11 in stage 2 where they're testing hundreds, and 8 in stage 3 where they're testing thousands. And of course we have the 2 approved vaccines, of which people may be quite skeptical, but they have been approved in Russia and China. And there's some spectacular examples in the US, for instance, with Moderna, which has had 85,000 tests. It's getting $1 billion in research support from the US government. So my view is that we'll continue to see positive news around vaccines, which will be a key factor in the balance between the level of risk that is obviously always a key driver of the Australian dollar. You know, you also need to think about the cycles that the Australian dollar has showed over the last 30 years. Basically, there's only been one time, which was that big fall that we saw straight after the GFC, when those cycles have been less than 2 years. We've seen 4-year downlift, a 7-year uplift, and the most recent 2 movements have been up by 2 years and down 2 years. So it's pretty clear that the Aussie dollar did bottom out in March, where it got below 60 cents, now nearly 72 cents. So be a brave person to say that this cycle is going to last only a few months. And in terms of the cycle lasting a normal, say, 2 years or so, that brings you into strength through the course of the end of this year and through next year. We're also quite sceptical about the US dollar. It's already fallen by 10 percentage points. We expect that the US dollar will continue to weaken over the course of the rest of this year and next year. We're more positive about growth in the Asian economies, and of course we will see growth in the world economy turn around from a contraction this year to growth of around 5% next year. That also boosts that risk environment. Hence, we expect that the Australian dollar will lift by that 4 or 5 cents in 2021. But there are always risks. And the first risk I wanted to talk about was the Australian economy performing significantly worse than we expect, and certainly worse than the Reserve Bank expects next year. If that were to be the case, and if the Aussie dollar is lifting, the Reserve Bank may decide that they want to try and support the Australian economy through the currency. That might mean intervention, or it might even mean negative interest rates. Because as I've argued in the past, negative interest rates would have their major impact on the Australian economy through the currency. Can you imagine a small open economy with large foreign debt having to finance itself in a world economy with negative rates? It would have a major impact, and all you need to do is look across the Tasman as to where the markets are now pricing the Aussie dollar against the New Zealand dollar, where that central bank has been talking about negative rates. So that remains the first risk. I guess the second risk will always be the US election. People will recall that when Trump unexpectedly won in 2016, the Aussie dollar fell by 8% over the course of the next month or so, only to recover by the time of the inauguration in January. So could that happen again? My view is that a Trump victory would be a surprise, but I don't think markets will be in any way complacent in the way they were in 16. I don't think they'll in any way react with such surprise if we saw a Trump victory. They're much more cautious around polls, realising that many Trump supporters might be a bit reluctant to actually answer that affirmative question when asked in polls. So I don't see those as being I don't see the US election as being a major risk to this ongoing strength in the Australian dollar. So let me summarise. Aussie dollar up to 75 cents by the end of this year, up to 80 cents by the end of next year. Fair value at 78 cents. Aussie dollar almost always participating in long up and down cycles. And this cycle began in March and is very, very likely to continue through this year and through the whole of 2021 and into 2022. Thank you.